A second day of very sharp declines coming in for commodities, and this is after the FOMC minutes pointing out that there is a downward risk coming in after the extended asset purchases. That is something that really is bothering the market. So you have the gold prices now negative 6.5% for 2013. Same is the case with silver as well. And you have seen very sharp declines coming in for those base metals and crude prices too. How do you trade all of those commodities? For that, let's get in Anurag Kataria from ITI, and he joins us live on the show. Anurag, hi, welcome. Let's start with precious metals first, and the kind of highs that we saw just in the previous week, from there to 1550 kind of levels. How are you trading this space today?
Yeah, Manisha, if you remember last week, we had thought about the levels on the same lines. We were talking about somewhere around $1560 to $1580 kind of a support zone from $1625 to $1635. And the kind of correction we have seen was pretty sharp and steep. Along with that, there were some rumors about hedge fund being forced to liquidate certain holdings in commodities. That as well played a big major role in yesterday's fall. But looking at the technicals, we feel that $1560 is working as a support, and one will have to really wait and watch how the market trades from here. But we tend to believe from here onwards, the market will not have kind of a sharp fall, which we have seen, more of a trading zone, or probably more of a finding the bottom out. Probably we might see some kind of rebound, but will not be sustained till the time market crosses $1585, and closes above that. So probably we are looking at a level of somewhere around 29,600 to 500 kind of a level on gold front, or probably breaking those levels as well. So we would recommend to sell gold at current market prices for a stop above somewhere around 30,000, and probably for a initial target of 29,700 to 600.
And it's not just gold. Actually, silver prices have declined even more sharper, negative now 6.5% for this year. $28 just about holding there, Anurag. What's your sense in that one?
Yeah, silver actually coupled with the base metal sales actually was tarnished to pieces. Probably we never expected that kind of sharp decline in silver, because somewhere we were having a feeling that base metals are holding up the prices. But immediately after the Chinese vacation, the kind of sell-off we have seen in base metal, that has given a lot of trigger to silver as well to fall further, or being pushed to the limit. But we still believe that 52,500 to 53,000 kind of a level in silver can be looked upon to initiate a fresh buy. Till that time we will be bearish, and we will be selling silver on the rise again.
As you mentioned, Anurag, there's no strong data coming in from Europe. There's no Chinese buying happening. And after the FOMC minutes as well yesterday, what's your sense coming in for the base metal sector now?
Yeah, FOMC minutes were again, as usual, were confusing, and probably one will have to wait till March 20th to have a more clear picture. More or less yesterday there were views from independent sources in terms of what needs to be taken care. Probably that has been reflected on the minutes, and that has given a lot of confusion to the market as well. 20th would be much clearer in terms of simulation, and in terms of packages which might be declared to support the economy further, or probably take the market its own course. That one will have to wait and see till 20th of March. So that's our belief, that the market will be more or less on the trading zone. So nickel we have advised to buy at current levels, probably anticipating some kind of a short recovery, and some data might be possible to come in, but purely it's a technical call, and it should be looked upon as a value buying.
Well, 1% of a decline is quite common across asset classes today, and same is the case with crude as well. Sharp declines coming in for that one. Do you think we could be looking at some support areas here as well?
Yeah, crude we would be looking at again the old zone, if you remember, around 92 to 94, $95 kind of a range, wherein for a long time $92 was acting as a good support in the market. And given the kind of strength in the dollar against the rupee, I think $92 should be the level one will have to watch out for. But crude on MCX front, we are giving a sell call, probably targeting around 5100. The ideal buy for crude will be somewhere around 5,000 rupees.
Final question, Anurag, then, and where do you see a more buying opportunity after the kind of declines that we have seen across space?
I would like to place my bet today on nickel, and the simple reason I have spoken about is some kind of short covering we might expect in nickel, because copper has stabilized. In copper we have seen some kind of a recovery of around ₹1 and ₹1.50. Probably nickel will react much faster to other commodities if we find some kind of support in silver as well. So nickel will be one bet which are on the long side, but otherwise we are selling everything.
Milan Bhavish of Venture Growth and Securities joins in with some commodity trading ideas. First up, gold. We're seeing fair amount of pain in trade today, Milan. What would you advise traders to do today?
One thing is very clear, that the price of bullion is largely the function of liquidity in the system. Now, over the last few years, the US has doled out several liquidity infusing measures in the system to propel growth. Now, when the Fed debates over the benefits of more stimulus, panic in bullion is natural. Over the last few days, we have seen sharp selling pressure in gold and silver. The fall in COMEX gold is bringing it closer towards the long-term support of $15-30. Now, unless we see good signs of reversal, we do not suggest bottom fishing in gold. For the day, MCX gold April contract can be sold on rise around 29,450 levels for the target of 29,250, and stop loss can be placed at 29,575 levels.
Right, and what about your view on crude?
In the recent past, crude oil prices had seen a sharp up rally even though the stockpiles were rising continuously. Hence, a price correction can't be ruled out. Add to this, debate over the future of stimulus has spoiled the sentiment. For the day, crude oil can be sold for the target of 5090 and stop loss can be placed at 5191 levels.